In real estate lending, there's a few things we have to know to fund a deal. You don't want to get on a phone call, have an amazing call, and afterwards not being able to describe what the heck they're even trying to do. Today we're going to discuss the critical items you need to get on the first call anytime you're talking about somebody about getting a loan. All right, let's do this. Hey, welcome back to another episode of Finance Agents Live. This is episode number 87. And before we get into the 87
Do you know
factoid,
what 87 is?
before we get into that, who missed Rhoda? Who missed Rhoda on our last show? Type into the box if you missed Rhoda. I got a lot of people are asking, when's Rhoda coming back? She's back. She's right here. She wants to hear about it. Put it in the comments. She's looking at what you're saying right now. So when you put that awesomeness in there,
nobody says anything.
it takes them a while. I got to talk for like
and
30
like,
seconds
wow,
before.
I guess nobody.
All right, somebody out there types in. Anyway, they will.
I'll type
I promise.
I have no problem with typing.
Darren's going to type into the box.
Yeah, but you're
Okay.
my 87.
87, go.
Do you know what 87 is?
Nope.
7 years ago. It's the time from independence to Gettysburg Address. 7 years ago is 87 years.
That's pretty amazing. That's and the relation to this? Nothing.
87.
Right.
It's show 87.
Okay.
What's the relation to
That's
the
cool.
time
right?
it takes planets to orbit the sun?
All right.
I'm not going to say it.
It's also the ISBN number for books published in Denmark.
Wow,
Or
we're really
the-
getting into this. We're really starting to
or the
analyze it.
element
I looked up
number of
87.
Everybody's taking my
There's-
jokes.
There's like some stone named
That's just-
fractonium or something like that. Which
francium. It's
No.
francium is
Whatever. Okay, we're
Element
totally
number
off the rails
87.
here. All right, going back to this.
See, I have an idea
Speaking
and everybody
of
just
getting
hates
lost
it.
and off topic, today's show is about having that first real estate call. I know, crickets, but they're thinking about it. They're trying to think of the best amazing thing to say. We're talking about having that first call with a prospective real estate client, and it's easy to get lost and forget about what the heck you're supposed to actually be talking about. We're going to go over the basics.
Not if you use my trick. It's not hard at all. It's very easy.
There's a trick?
Yes, there's a trick.
Okay, well then I look forward
I've
to
said it many times.
learning your tricks
You can learn.
on the show. And that's what we're going to be talking about today. We're going to be going over what are the things you need to know by the end of the call so you can be thinking about it at the beginning. So you start with the end in mind, right? So that's it. We're going
The
to
end
discuss.
is the funding.
The end is
Commission.
actually for the first call. The end is getting off the call and knowing what the heck what's going on. That's what I'm saying. So today's show, we're going to talk about what you need to accomplish on the first call. 3 things we're going to talk about. Your first call goals. What are your goals going into it? 2, specifically what you want to discuss in order to accomplish those goals. And 3rd, just in general, how to think when you're doing these calls, because there's going to be stuff that comes up that's outside the purview of what we're going to discuss today. And that's the whole point of what we're doing. Not just tell you cookie cutter what to say, but how to think so you know what to ask and how to set the expectations for the client. So
Think
that
like me, not like Tim.
Okay, right? Whatever you want to do. As long as when you get off that call, you know what the heck the client's trying to do and you know if there's an opportunity, right? So that's what we're going to do today. We're going to be diving into it. First call goals. What are your goals when you get on the phone with a prospective client there, Rhodes?
I want to find a need and pre-qualify them. That is my goal. I want to understand their opportunity, and that means I got to know how much they think the land is worth and how much they have to put into it. I got to understand that. I have to understand if there's a building on the property or is it land. I've got to understand basic details of the opportunity.
Okay, great.
Basic.
Yeah, so the first thing we were talking, she mentioned find a need, right? You want to understand what their need is. What the heck are they actually trying to accomplish? If you get off the phone and you don't know what they're trying to accomplish, man, I'm sorry. That's like the first thing. And it happens all the time. You may sound like, oh, of course they know what they're trying to accomplish. They said they want a loan. Getting a loan is not the goal. Getting a loan is a step towards the goal. What is the actual goal? Are they trying to save money on their prior loan? Are they trying to get out of a tough situation where their loan has ended? Now they're in technical default. They got a balloon. They need to get out of it. Are they trying to pull capital out for some sort of a project? Or are they trying to avoid paying tax liens and losing the property? These are very different goals, okay? You need to know what the heck the goal is. Don't just have somebody say, I need a loan. Great. Because it has a big impact.
A good thing to figure out, if you understand it, is if I pick up the phone and call you as the agent or the broker, could you explain it to me, a third person? Because a lot of times I pick up and I call agent, broker, somebody, third party, and they're like, I don't know. Let's get them on the phone and find out. ask questions until you understand, because if you don't understand, I'm not going to understand. Ask until you understand. Don't be afraid to ask them questions.
By the time you get off the phone, you should be able to put together a super succinct little elevator pitch for what the heck it is.
Yes.
So you can call somebody like Rhoda and say, hey, Rhoda, I got a guy who owns a farm in North Dakota worth $1.6 million. He's looking to pull $800 out of it, needs to refi and pull a little cash. His credit's horrible. Is that something you could do? You got the state, you got the use of funds, you got the asset value, and that's a scenario. And most lenders are going to say yes or no. They're like, horrible credit, no go, North Carolina. This is something we're working on right now.
Rick.
See, all right, Rick, see? That's it. You need to be able to, that's the end goal. Find that need, understand the opportunity. What do we mean by understand the opportunity? What are the things that you want to know in order to really understand if there's an opportunity at all? What's the number one thing we need to know there's an opportunity?
LTV.
You feel everything's moving.
Got to
LTV.
understand the LTV. How much is it worth? Are there existing liens on it? Tax liens, prior mortgages, first, second, third, anything like that? How much is the property worth and how much are they looking to get? Loan to value. First thing you need to understand.
Loan to value, like what are they coming into it and what are they hoping for us to help them do? And it all revolves around the equity and the property, right? If you're bringing us somebody who's looking for 100% financing, that's okay if there's a seller carry, but you got to know that we're not funding everything. There are exceptions, right? Like I got a guy who's buying a hotel worth more than $1 million. He could buy it for $500,000. We may finance the entire purchase. But you got to know that the opportunity, when I say opportunity, it's the equity or it's the LTV spread, right? So super important. So find a need. What the heck are they trying to do? Understand the opportunity. Is there an opportunity based on equity, which is all we care about? And then third, you want to do all that while setting a tone in order to make sure you actually get the application. Why do you want the application, Rhoda?
I can review the file, Tim.
Right. If you don't have an application, you don't get a deal, right? If you don't set the tone correctly and you don't come across as positive and you're not understanding the client goals and trying to help them figure out how to get there, then you may not get that application. It takes a client some time to put an application together. So after talking to you, they need to want to apply, all right? So don't be the normal you if the normal you isn't that fun to talk to. Be the fun you. All right, those are your first call goals. So let's go over more specific things that you want to discuss in order to, find the opportunity, find the need and understand the opportunity. What are some things to discuss?
Right, so I mentioned before, you need to understand the description of the real estate owned. Is there a building on it? What kind of building is it? Is it residential? Is it commercial? If it's commercial, do they have tenants in it? And different things like that. Is it in good condition? Is it need some rehab? What is the real estate like?
And by the way, make sure never to forget, when we talk about the description of the real estate owned, it's not just the one real estate item they're calling about. They may own other things, right? So maybe there's not enough equity in order to make a deal with this one property. But often we say, hey, can we cross-collateralize something else you have? Do you have any other land or properties or businesses in order to help make this deal work? Get all the information on other stuff they own, because that is a way to find an opportunity when otherwise there isn't one. All right, so equity. What do you ask to figure out if there's equity in a deal?
You ask how much the property is worth, both kind of what they think it's worth. Have they had an appraisal done recently? Sometimes you can cross-reference it by asking them the address and getting on something like Zillow or Redfin or LoopNet. I know there are a lot of criticisms about these, but it's a guide and it's a starting off point so you can understand the value if the borrower thinks it's really inflated, has it really inflated or not, and then how much do they own on it or if there are any liens on it.
Right, for residential property, Zillow is a great sanity test. For yesterday, I got a deal where they said it's worth $2.5 million. Hey, look it up on Zillow. It's for sale right now for $1 million. Bullshit. Right, I'm sorry.
Potty
I
mouth.
call bullshit. No, man, you tell me
mouth,
tell me
potty
things
mouth.
worth
Oh,
$2.5
my
million,
ears
but
is
you're selling it
bleeding. It's
right now
bleeding.
for $1 million. That's a bad one. Just the other day, I had another one. What is with $2.5 million? Just last week, I had a property submitted. They said it's worth $2.5 million, and I look, and online they have a real estate agent actively selling it for $799,000. I literally called up the real estate agent. I said, "Am I seeing this right? It looks like this property is available for sale right now for $799." She said, "Yes." Well, look, if you're trying to fire sell this thing for $800,000, it's probably not worth $2.5 million because that's a pretty heavy discount. So you need to understand the equity. Another important thing is it owner-occupied, right? So is somebody living in it? What is owner-occupied and what is not owner-occupied between residential and commercial? Rhoda, go.
So with a residential one, if they are living there. Another one is if they have a vacation home that they don't rent out. Sometimes that can be considered owner-occupied as well.
Right. Now, interesting question that pops up. If a business owns a piece of real estate and the business inhabits it, is that owner-occupied? Well, if you look at it sounds like it is. The owner occupies the place, but it is not what we're talking about when we say we don't like owner-occupied properties as much, or we have specific rules, or it's difficult, because we're just talking about when you live in it and the stuff regulated by the CFPB and consumer lending laws, right? We do commercial lending, so owner-occupied means I live in the house, not my business owns the property.
Right.
All right, so description of real estate owned. Is there any equity there? Is it owner-occupied? What's the next one that's important? We kind of talked
What do they want
about
to do
it.
with the money? What are they going to do with the money? Are they going to improve the property? Are they using it to pay off other debt? Are they refining another loan? Or do they just need cash out?
The number one reason we need to know the purpose of the loan is it helps me know how flexible we can be on the offer. If I see a property worth $1 million and they say they need $800,000 and you tell me it's to purchase it and there's no seller carry, that's dead on arrival because we're probably not doing it, okay? But if they say they need $800,000 and it's for their business, I know that businesses can be flexible with use of funds, right? So if we can get them $500,000, we might be able to get them to what they need, and maybe it's still worth pursuing. But if there's a hard, definitive number that can't be budged and it's too high, well, you might as well just cut your losses and move on. All right, what's the next one? Injection capital. What do we need that for?
Well, we need to know how much they have to put into the project. So if they're looking for 80% or 100% financing and the seller is not willing to carry, probably not going to work. But
I like it. That was good. We should do that more often.
He'll steal that from me too now.
I'm going to growl all week long now.
Oh, I'm turning that into a sound clip.
All right, perfect. Make my ringtone.
So if they have 70% down and are looking for 30% just to complete an acquisition, that's a lot more likely to go and get some traction.
You have no idea how many times people submit an application. They say, hey, it's $1 million property. They want a loan to buy it. I say, great. Well, how much money are they putting into it? They're like, money? You're the lender. Like, come on,
Zero.
man.
Okay.
Come on, guys. Come on. Nobody. You don't go to the bank and say I want 100% finance.
Yes, you do. People do it all day long.
Right, but they don't give it to you either, and that's with like perfect credit and everything going right, and they're going to drag you through the mud for 3 months, and you're next of kin, and anything you could possibly imagine. This process, you're still going to have to put down some money. I mean, 3% absolute minimum with the most aggressive lender out there, usually 5 to 10%. So, guys, it's ridiculously unreasonable to assume you're going to get into a property with no money at all. I mean, unless you're coming to us where you got a seller that's willing to do a carry. But look, make sure to talk to them first. Make sure there's a deal. So injection capital is important to know if somebody's for real. Somebody calls me up and says, hey, I want to buy this $10 million building. I say, how much money you want to put into it? I say, I don't have any money. Come on, that's like, save your time, save my time.
Yeah, I got
Move
that
on,
today.
Because they're smoking something. Right?
Well, in fact, today I got one. He wanted to buy a grow farm for, 90 acres in Humboldt. He had zero to put into it.
Yeah,
He's going to make $18 million a year. So we don't do land, was my response.
He might be able to make that much money if some other crazy person will give him the money. But look, we're pretty crazy, but we're not that crazy. I'm sorry. All right, so injection capital is important. The next one, important deadlines. All right, I know I'm throwing out a lot of things here. It kind of sounds like a lot, but it all is encapsulated in thinking how are you going to get this deal done? What important deadlines are critical because you might have a cliff, okay? Sometimes the cliffs are real, sometimes they're not. I've got an option to buy this property. It expires May 1st. Can we get it done in time? Well, okay. Now I know that we have until May 1st, and my first question is going to be maybe, is the seller willing to work with you if you don't hit that deadline? Maybe they will, maybe they won't. You need to start talking about that now. We'll do everything we can to get something done in time, but stuff happens, right? My God. So, important deadlines. Now, on the other side, there's fake deadlines that people put out there all the time. I hear somebody say, guy needs to get this done by next Friday or it's over. You know how many times I've had somebody say that?
How many?
It didn't happen. I have no idea because it's so freaking many. I've lost track. They say it needs to happen by next Friday. It doesn't because it's impossible. Nobody in the entire planet is going to give them the money by next Friday. And then, amazingly, the next week, the deal's still alive. All right, so there's fake deadlines. Like I had a commercial property that came in the other day, and he said the guy needs to get it done by May 1st or he's losing the property. Well, dig into that a little bit. What's that really mean? That means he has his balloon payment's due May 1st. But guess what? If he doesn't make the balloon payment, the lender can't take the property away that day. You got to go through foreclosure. We're talking 6 months to 2 years, depending on what state you're in. That's a fake deadline. Okay, you got a lot of time to work with a person. Don't let them wag the dog or say, we can't get it done in time. You just lost that client. When you need to be thinking about the reality is this is something we can work through.
And it's not to be dismissive of people's deadlines. There is urgency, and you understand that. And you do want to work quickly.
We always work as fast as possible, but don't be swayed by a fake deadline. You want to be reasonable and work with them, but there's real deadlines and fake deadlines, right? Having an option that's going to expire and the seller has other buyers lined up because you're getting it at a super deal because you've had the option for 3 years, that's a real deadline. I put down a deposit, I'm going to lose the deposit, I won't get the money in time. A lot of people, you're going to lose it because they want to keep your deposit. So there are real deadlines and fake deadlines. So talk about it to understand what it is so you can communicate it to us. I got a real deadline here. If it doesn't have by Tuesday, this thing's done. And maybe we just won't waste our time on it if there's no way we can get it done in time. And then the last thing, the most important thing, the all-encompassing thing that we want to talk about, Rhoda, is our
problems. Got 99 problems, and
I ain't one of them.
I ain't one.
Maybe. No, I'm just kidding. All right, problems. We want to know what the problems are, okay?
Are you the solution or the...
Strangely, different from other lenders. When I get a deal comes to me and somebody says, hey, this thing's clean, great credit, good business, 50% LTV, guy's got time, he's shopping. And I'm like, well, what kind of problems are there? And like, no problems, this is a good, clean deal. I'm like, that's the problem for us. That's not going to be our client, okay? I want to know what the problems are, and I communicate to people, hey, I'm not the guy that you hide the problems from. I'm the guy you tell the problems to so I can work around them because we're willing to work around it. A lot of lenders, you got to be afraid of your skeletons in the closet. I need skeletons or I probably don't have a deal, right? Tell me about some problems you've had that popped up, Rhoda, and some of your deals.
I guess the way I present it or ask it is differently than you do. When you say what are the problems, I ask them, have they been to other lenders and what happened there, so that I don't know, I find people are a little more transparent that way. Well, I went to this person and they didn't like it because of this, and I went to this person and they didn't like it because of that, and that helps me kind of frame it and get them to articulate what's maybe wrong with the deal or problematic. I would say one of them, I don't know, some people didn't like a term, or they didn't like a rate, or there were extra liens that they didn't know about, or one of them, there were a lot of liens, and then he kept dragging out all of the time, and so by the time we got through, another month had gone by, extra fees had popped up, and then it put him over the LTV. So understanding that is definitely important.
Yeah, I hear all the time people say, I went to this other lender, the lender strung him along forever and then finally killed the deal, like blaming the lender. Well, probably they didn't disclose the problems in advance, and when the lender actually found out about it, they killed it. So I blame the lender, but probably there's some real problems on the file. I want to know what those problems are, right? Hopefully, we generally can work around them. All right, so I got some examples of files that have come in. This is a little bit beyond first call, but first call needs to turn into a complete application. So when we get these applications, I look through them, and if there's big gaps, I'm generally calling up the agent. It's kind of the impetus of this whole thing. Call up the agent and say, hey, got your app here. I'm missing this. What's the fill in the blank? And they need to be able to answer those questions. So I've got some actual examples here. Redacted to protect the guilty, let's say. All right, here we go. We got a loan request, $780,000 on an 80-unit property that's residential. First of all, that's a little confusing. It may be a condo. I don't know. Current market value, 1.3 something. Purchase price, $780,000. Right here, I'm getting some red flags. I'm like, okay, it's a purchase price of $780,000. You should know that our general rule of thumb is whatever the purchase price is, we consider that to be the value. It's an exception when we don't. So if we say the purchase price is $780,000, they want a loan for $780,000, that's probably a problem because they're looking for 100% financing, right? Do we do that like that, Rhoda?
Well, depends. for if their seller was going to carry, but that's not marked on here anyplace. And then 1.3 divided by 2 would be over 50%, so it would be tough. But it's just, yeah, it's pretty ambiguous.
Yeah, right. You really don't know what's going on when you look at this thing. When I talked to the seller, they are planning it. They'd already talked. When I talked to the client, they had been talking to the seller, and they had coordinated a seller carry. So it's not true that the purchase price is $780. The purchase price is $1.3 million. So that purchase price is actually supposed to be the price you're buying it at, and if you want a loan for less, it makes it easier for us. Now, other debt, we got, that's totally blank. What's the project summary? Totally blank. Exit summary? Totally blank. You know, you're really like, what the heck are we doing here? I have no idea.
Right.
And if I call you, you should know these things, right? Otherwise, you really don't know what the heck the deal is. All right, here's another one. What are you seeing on this app that is an opportunity that you might want to discuss, Rhoda?
Well, I can't see that far because
Okay.
I have
pretty
poor
small.
eyesight.
All right.
I don't know. You tell me.
This is a
looks like maybe
screenshot
there's
from
different
page 2.
Properties.
No, page 3 of the app.
Available.
It's personal financial statement and schedule of real estate. So the example here is somebody has other real estate that they kind of like teased us with. Original cost $1. Who buys real estate for $1? I don't know. Estimated current value, what is that, 10,000? I don't know what that is. But I want to know about the other real estate because we could possibly cross-collateralize and get a larger loan. I had a deal submitted yesterday where it came in, $800,000 property. They wanted to pull out $500,000, which is a little bit high for us LTV-wise. And the person said, guys actually got another piece of real estate that's free and clear. We could tie that in. I didn't know if the client wanted more money or not. I ended up actually presenting or sending out 2 LOIs, one based just on one piece of real estate, one based on both for a much larger amount. So a lot of clients want as much money as possible. Give me all the information on all the real estate. You might get a larger offer. Larger offers might make people happy. Darren is dancing back there, by the way. You're missing out on it.
He's trying to remind me to smile, but I can't see him concentrating so much.
All right, example 3, all question marks. What do you see on that? I know you got to look real close here, but what do you see on this app, Rhoda?
Well, I see opportunity, Tim, because what I see
I see a whole lot of nothing.
My tip is that when you are talking to borrowers, use the application as a checklist and fill it out for them. And then you say, how much are you asking for? What's your exit strategy? When they tell you, then you say, okay, so what I'm hearing is, and then you fill it in for them, and that confirms that you understand what they said. And then when you send them the application, say, I've got most of this done for you. All
You want to actually fill in the app for the
it
client?
Out for them. Make
That's
it easy.
work.
Make it easy for them. So
That's a great way to set the tone to get an app done. All
and
they
it
have to do
makes
is
sure
sign
that
it.
you don't forget anything. So what I see here is opportunity, a blank canvas.
Opportunity. I love
learning.
it. Blank canvas is right. This is empty. I don't have a property type. I don't have a purpose of the loan. I don't have the year of the thing. I don't have number of units. I don't have the current market value. Even a guess, for crying out loud, is better than nothing. You know, I literally have no idea what's going on here. I get this thing, I pull it up on Zillow. If it's commercial, I got nothing, right? Because there is no commercial for Zillow. There's LoopNet, which is completely useless. They just put the price you want to sell it at. They don't put anything about the value. Zillow at least shows historical. Other times it's sold, property tax. There's a lot of good information in there. LoopNet, nothing. So if you got a commercial property, you got to give me something, right? I can't put out an offer with nothing. Sometimes I get these things, there's not even a name on them. What's the point of that, right? So if you want to get the deal done, Rhoda's got a great tip, and let's just do the work.
You did get
for
that
the
deal
client.
from Scottie Pippen the other day.
I got a Scottie Pippen looking for sell his house. All right, next, Rhoda, how to think. All right, so we talked about things. We just mentioned a lot of different things to think about or ask about. How do you remember all those things?
Well, you use the application as a checklist, Tim.
Hey, that's a good idea.
Thanks.
All right, beyond that?
Beyond that, think like an underwriter. Always think like, what is the big picture that they're going to be asking for? What is the LTV? What's the equity in this? What's the property value? What else is underwriting going to ask for to confirm it? If it's a rental property, how much rent are they generating? Think like an underwriter and just keep asking questions until you understand the deal.
Yesterday I had somebody come in. I wasn't sure what was going on. I called up the client and she said, yeah, I got a current offer at 6.25%, but I just thought I might as well submit and see if we could beat it. You know, if you guys know anything about us, that's not our field, right? We're not beating that. because we're not cheap, right? If you have a problem. So that's another one is, recognize the mismatch. So think like an underwriter. Try to think
someone's mom.
LTV and opportunity, and then recognize the mismatches so you don't waste your time or anybody else's. Now, with that said, if you're talking to the person, it's not uncommon for somebody to say, yeah, I got this offer, but I'm still shopping. And you're like, why are you still shopping? Because it's not really an offer. They don't actually think it's going to go through. So in general, it's better to submit it and get an offer out, because you never know. That other lender might drag them on for 4 months, and then all of a sudden they got a week to close and they get dropped. And then they come to us and they're happy to take the rate, because that's what we're here for. We're here to help people when they're in a tough situation. But in general, think like an underwriter. Try to think, how am I going to package this, or how would I pitch this to a lender? If you can make that pitch, if you can describe it briefly, now you got a deal. If you can't, you probably don't know what's going on. All right, so last thing, set the tone. Rhoda already gave you this amazing tip, which is fill out the app for the client. What else do you do in order to make sure you get that application signed and returned for you?
Keep it positive. You don't want to say, oh, that's crap, that's the worst building ever. I heard that today. Things like, this is the worst deal. Okay, don't say that to your clients. Stay positive. Say, oh, that sounds really great. That's amazing. Good. Stay positive.
Yeah, there's a way to deliver bad news, Yeah, and there's a bad way to do it too. So
That's terrible.
I've known people who pretty much every time you submit any deal to them, they just shoot a bunch of holes in it, even if they can maybe fund it, because they like to beat the heck out of it first to try to see if it's a real deal. I get that. I understand the mindset, but you got to be careful if you communicate that too much. People think, I don't want to send anything to him or her, because they just rip the heck out of everything. There's obviously nothing going on here. So Darren looks like he's about to chime in. Nope, just dancing again. There's a lot of dancing going on today.
I'm just adjusting things back here.
Okay, who's doing this?
I kept on running into the microphone.
All right. Okay, anyway, that's it. That's it for the show. Those are the things you want to keep in mind. Everything. In general, think like an underwriter. Stay positive. Look for equity. Find the problems. Understand the opportunity. Submit it. Get funded. Get paid. If you're not in the masterclass, we teach you about a lot of this stuff and much more. So go find one of our shows about the masterclass or join. We'll walk you through everything about how to do real estate. If you're new to the show, subscribe. If you're glad Rhoda's back, like the show. If you wish Rhoda wasn't here, like the show. That way she can't tell the difference or whatever.
No one ever thinks that. I'm a buddy.
We're happy to have you back. That's it.
So
Rhoda,
kind.
anything? You got any last words? Any other cool uses for 87?
Just going to say you threw away my bagels while I was away.
I didn't throw away anybody's bagels. Oh, God. All right, let's wrap it up for that. Thank you for coming on the show. Look forward to doing a lot more deals together. See you next week. Next week, we're going to be talking about using retirement account financing, 401k financing for real estate purchases, how you can combine it with a loan. It's something that a lot of people don't think about when you need a little bit of cash to put in a deal. I'm going to show you how to do it. I'm going to be joined by the fabulous Ben Morris, who runs our retirement processing division.
I bet he won't have a joke about 88.
But he's going to be just... I
got one.
don't have a joke either. So
I'm holding on to it.
Maybe
the two of you can have your own jokes.
88, I don't know. All right. Anyway. Okay. Cool. Well, see you around. Look forward to doing a lot more deals together. I'm out of here.
Bye,
Peace.
Russia.
Bye, Russia. What is it? Do you think they're just watching everything on the internet?
Spying on us.
Yeah, because we're on Facebook.
Yeah.